All right. We have a couple of guests from the USDA, United States Department of Agriculture Farm Service Agency. The Farm Service Agency is I think of as the banking and other financial aspects of the USDA. And with us today we have Tom Brandt, who is the farm loan chief for the state of Wisconsin. And he's going to talk a little bit about farm loan programs and the kind of services they have. And then Susan Hunter will join us in a little bit too. She's Columbia County Executive Director. So I believe every county in the state has a Farm Service Agency presence and a counterpart to Susan. So, and every county has some connection to the farm loan program. I don't know that they all have farm loan specialists or officers or whatever they're titled now, but there is a presence in every county. So, anyway, Tom, if you want to go ahead and introduce yourself a little bit and share. Yeah, you don't, just so they can hear you, I guess.
Okay.
And then you can click, or arrows are on that side. There we go.
Okay, should work. As Randy said, I'm Tom Brandt. I am in our state office down in Madison as the farm loan chief for Farm Service Agency. And a little bit about who we are. FSA is a division of the Department of Ag, and we have several different things. What I'm going to talk about is our loans, and Susan's going to cover the other stuff. But if you think of the Department of Ag, we have a Secretary of Agriculture, Tom Vilsack in Washington, and then under him is an FSA administrator. And then from there, we have presence in each state. In our state, we have our state executive director, Patty Edelberg. She's a farmer from up in central Wisconsin. And then under her, we have different divisions. We have our farm program division. Susan's going to talk about that. And then farm loan, which I'm the head of, as far as what we have here. But what we do on the loan side, we make guaranteed loans to family farmers who are unable to obtain their financing elsewhere, primarily looking to get people started in farming, or those who have maybe suffered a setback and need some additional assistance. You see, we put an extra emphasis on making loans to beginning farmers and minority farmers and women farmers. So what you'll see in the slideshow, there's stuff listed as SDA. It used to be called socially disadvantaged. Really, it's underserved clients or people that have at one time been discriminated against or held things back. So pretty much our minorities and females qualify for some additional assistance on certain loans. The ones we typically help are that we do have a test for credit. So if you can go get financing elsewhere at reasonable rates and terms that you can easily cash flow that in your office, then you're supposed to go to that bank or whoever you're financing with. If you cannot obtain that elsewhere, or if they say, your equity isn't quite there, or we need some additional collateral, whatever it might be, that's where FSA can get involved. Typically, a lot of beginning farmers, because you aren't starting with a lot in your pocket, so you're going to need additional financing, where a bank is maybe going to want you to have 30% down or something like that. At FSA, we can actually finance 100% of most things that we're doing. Along with that, we are only temporary credit. So once someone is able to move to another lender, we expect them to graduate from our program and then get the financing elsewhere. We are a little cautious on that sometimes. We don't want to force somebody out, and then if things go bad, they end up coming back a year or two later. So we make sure things are looking good, and we'll refer to banks only when we think it's really necessary. And most of the time, someone is leaving our financing before we would ever try and push them out. So we help lots of families here in Wisconsin. Right now, we have a direct loan portfolio, and I'll explain some of that a little bit later, but $542 million that we loan directly to farmers. And then a guaranteed portfolio of over $1 billion, where we work with the banks to provide that financing to the customers. Ours is the largest in the nation, so we're pretty active here on our farm loan program. We got really good people in the field to do that, and our lenders cooperate with us a lot to help get that money out there. Right now, we have about 3,400 borrowers in our direct program and 2,200 in the guaranteed program. Some of them are overlap. We are really helping 45 to 5,000 farmers in Wisconsin that have some type of FSA loan with it. And if we look at what is considered a typical farmer, usually figure we're out there in basically 1 out of 7 farms. This last year, we put out $386 million direct and guaranteed. The prior year was like 393, and that was the tops in the nation. We haven't seen all the statistic yet from this year. Our fiscal year runs from October through September. So once they get everything compiled, they'll give us the rest of the numbers here for this year. We did almost 1,700 loans that we approved this year, but there's also over 500 applications that we did not approve. We had about 300 that were just withdrawn. We maybe talked to them and it wasn't working, or they didn't submit everything. That application goes away. And over 200 applications that were rejected, about 250. So something they're looking for we really couldn't do, and we had to turn some of them down. So those numbers are extremely high this year, because if you're involved in farming, you know that the economy isn't that great now with the prices we're getting. So normally we will withdraw or reject about 20 to 25% of our applications. This year it's about 35%. So as I said, over 70% of our direct loans go to beginning farmer or the underserved applicants, and that is part of our mission to reach out to those that can't get the money elsewhere. We have certain goals that we have to reach every year, and beginning farmer is like 40% is our goal. So on the direct side, we're really hitting that hard. But just because we're the government and we're lending to people that nobody else maybe will, we don't have a loss rate any higher than any bank does. In fact, it's lower than most. Our delinquencies are only 2% on our direct loans and 0.5% on the guarantees, and our loss rates are less than 1%. Last point there, the zero subsidy loans actually, because our interest rates are so low and the losses are so low, our real estate loans that we make actually don't cost the government any money other than our administrative costs to process them.
Is this across the country, Tom, or Wisconsin?
That's just Wisconsin. Yep. Nationwide, I would say the delinquency right now is about 5 or 6%.
Is that because of the servicing? Do you see that because of the servicing that the employees in our state give the borrowers, that they're talking to them a lot more, they're out borrowing a lot more than what the banks would be? I hear that from borrowers.
It should be, yeah. I mean, we're not out there as much as we should either, but yeah, I think that helps a lot. And it is the time of the year too. You will see that our loans are made with a annual installment typically. So most of them, if you're buying cattle, machinery, real estate, we just make the annual installment due January 1st. So come January, that is going to go up, but then through the year we service those accounts or they get caught up and it goes down. But so we know that we'll be spiking for soon here, but even especially with this year with the economy the way it is, we think we're doing pretty well so far. What types of loans are we making out of them 1,700 that we did? This is actually last year's chart. I wasn't able to pull one up. So we're making loans to probably 30 some different enterprises. So even though our portfolio is 75% dairy and crop and beef, and we still have that section of loans being made, we're also making loans on 30 other different types of things. So we got people coming in, for loans for bees to make honey, and for aquaponics and all kinds of different things that are getting involved in. So. Our types of loans that we have, I mentioned guaranteed loans. Those are actually done through a bank. You work with the local ag lender who will make the loan and service the loan. Because it doesn't meet maybe some of their criteria of what they would normally do, then they come to FSA and ask for a guarantee. And we put some backing behind that loan so that if in the case there was a loss, then the bank isn't going to suffer the whole loss. We're going to end up paying, we can go up to 95% on some of the loans as far as the guarantee. So if something would happen, you bought a farm and all of a sudden the land disappeared, the bank wouldn't be out any more than 5% of the money. And it's only the percent of the loss, so we know that land didn't go away. If the value went down, there might be a small loss on something like that, but it's going to let the bank stay whole and be able to continue making loans to other farmers. On those who mentioned the repayment terms, that's up to the lender. So we are involved in it, but basically we're just backing it for them. So they're the ones going to set up your rates and terms and everything that's required on that. That was guaranteed loans. We also have direct loans. Those are where FSA actually makes and services the loans. We have loan officers out in throughout the state. Have a map up later showing where our offices are located. But if you're unable to get that credit from the bank, then you can come to FSA and we'll work directly with you. Repayment terms, we can do a lot more with our direct loans than maybe what a bank can do on some of the other stuff. We stretch them out a little bit if we need to. Our interest rates are extremely low. And the funds for the direct loans come from the U.S. Treasury. So it is, government money. It's something that comes in from taxes. So that's another thing is people ask who your customer is, and it's basically everybody. Everybody who's paying taxes are the ones that we are working for, really. So we make sure that, we are making good loans and getting that money paid back also.
I got a question for you.
Sure.
The guaranteed loans, is that, you keep saying, credit unions can't do anything?
No,
Credit unions.
Yeah, it could be. Banks, Farm Credit Administration, credit unions, anybody that is basically regulated by another agency.
Tom, could you just repeat the question?
Sure, yep. The question was the different type of lenders that can offer guaranteed loans. Other than banks, we can also do it with farm credits, with credit unions, anybody that is administered by, let's say, an FDIC or OCC, someone like that.
Okay.
So.
And those banks actually apply to be guaranteed. So not all banks are guaranteed lenders. They have to sign up with FSA to be a guaranteed lender.
Right.
To check with the bank. So they are a guaranteed lender.
Okay.
Or the credit union.
To make guaranteed loans, they have to basically ask us, and we find out, do they have the ability to service the type of loans that they're making. And we can go into all kinds of different things on lenders. There's different status. If they make a lot of loans, they're like a preferred lender. So they pretty much do all the work, and we don't have to do as much underwriting on those type of cases. Then we have other lenders that, they'll maybe make a few a year. So then we do a lot more analysis on those type of loans.
Generally, my experience is you just look at banks' website, they have agriculture, have some relationship with them,
Right. And if someone inquires to us about a possible loan, and as far as lenders that will make it, we have a list of who is active with us that we can put out there. Or if we just know a certain area you're in, we can't refer you to a certain bank, but we can, or credit union, whoever it might be, but we can say these are the ones that are utilizing our program.
Oh, okay. Yep.
So to go back to those guaranteed loans, the type of loans that we can make, a guaranteed operating loan, that's what it is. It's operating type money, so we can use that to, buy your crop inputs, buy feed, pay for living expenses, anything that is a normal operating expense on the year, and then also different things like purchasing cattle and equipment. On the operating side, and this goes for everything, on the guaranteed, we have a maximum loan amount of $1,399,000. That amount is subject to change every year based on the cost of funds index and everything like that. It started out at $700,000 and it changes that much. Actually, this year it's staying the same as it was last year because our costs didn't go up; it actually went down. So the amount stays there. I mentioned before, the rates and terms of those are determined by the lender. For these guarantees that we issue, we charge the lender a fee of 1.5% on most loans. So if they want to make you $1 million loan, part of that fee is going to have to come to help service that loan, which they typically will pass on to the customer or bill it right into the loan. But with the guarantees, a lot of times you can get a lower interest rate than you would without without the guarantee, and that fee that's paid is usually made up in the first year or two. We also have guaranteed farm ownership loans. And the farm ownership, those deal with the farm. So they are to purchase or improve real estate, and can also be used to refinance some of that debt. So whether it was real estate debt or operating debt, maybe we need to consolidate that into another loan or move some debt around to help with your payment structure. The $1,399,000 is a combined limit, so you can't get $2 million loans. It's altogether $1,399,000, depending on how you break that out on the different guarantees. We can go up to 40 years on those real estate loans. Typically, a bank is only going to do 20 to 30. And we can do that on direct also, but I've never really seen a purpose for going 40 years. There's an example later, I'll show you why. There's also guaranteed conservation loans. Again, that is within that same limit. But a conservation loan can be used similar to a real estate loan, only that it is available only for any type of conservation practice. So if you need to put in some manure storage or anything like that, that is part of a conservation plan, a conservation loan could be used for that. You can also use the farm ownership loan for that. But if you are a customer that maybe doesn't meet the test for credit, and you've got plenty of net worth and different stuff like that, so you didn't qualify for one loan, you could qualify for a conservation loan. It's to promote conservation, so we aren't worried about some of the other things. And then there's also a land contract guarantee. This program is so good that we've done one in the history of this program. And I don't know that there's that many others in the nation that they did. They opened it up as a pilot for a couple of years. They made 2 loans, so it was so good they opened it up nationwide. But it does. If someone wants to transfer a farm by land contract, there is the opportunity to put a guarantee on that, similar to our guarantees with the bank, where if you would miss payments, we could cover that. But typically, usually if it's a family member, they aren't really worried about it, so they're not going to look for that guarantee. Or if they
something that could help out a family situation though, where maybe one of the children wants to continue farming, yet the rest don't. So maybe help that family think about how to take cash money for inheritance to the non-farming the land contract.
It'd be a possibility. I mean, usually it depends on if that first generation wants to really hang on to the debt and do it themselves, or if they'd rather just you go get a loan from another lender and pay us off. And that's typically where most of them go. The guarantee, there's a couple different ways to do it. We can guarantee either the payments or just have a regular guarantee out there like we do on, to another lender, to where if you end up not paying and they have to foreclose on it, then we would end up paying the difference if you didn't get paid that. But a lot of times, especially if you're dealing with family, hopefully you're not inflating the price, and it's never going to come to a point where you're not made whole if you did have to sell that farm.
Maybe another spot is a non-family transfer kind of situation where I think it's programs I know we don't have any interest. That might be something that's digested.
Yeah, it's possible. And a lot of times too, it depends on what kind of terms that they want. If they want a guarantee out there only for a land contract for only 10 years, our program requires that it's amortized over 20, so you're not getting paid off in that first 10. Maybe they don't want to go that long. So it hasn't been utilized yet. So people usually find another way around it, or they find it's not worth maybe the paperwork to go through this program. But it is available. Then we have our direct loans. That was the guarantees where you're actually working with your lender to get those type of loans. On our direct loans, you're working directly with our offices in the field. We have the farm ownership loans similar to on the guarantee side for purchasing or improving a farm. We cannot use those to refinance debt. So if you already own the farm, we can't do a direct loan to refinance it and give you a cheaper rate. On those, we have a $300,000 limit on the direct side. So nowadays, that doesn't buy a whole lot, depending on what area you're in. So we do a lot of joint financing with other lenders to kind of split that up. But again, I said we could go up to 40 years on that. Our interest rate right now is 3.8%. You really can't beat that on a real estate loan, especially if you're taking it out for 30 years. But if the 300,000 is not enough, we look for those participation loans where we would split the loan 50-50 with a lender. As long as ours does not exceed the 50%, then our interest rate drops to 2.5%. And then we also have a down payment program. If you're doing a little better, the first two don't require anything down at all or any investment. If you have at least 5% to put down on that down payment program, we'll lower the interest rate even another point. So you're down to 1.5% on a down payment loan.
Do you get a lot of the down payment?
Yes. Yeah. The down payment and the participation are where most of our real estate loans are now. Because if somebody, there is that test for credit to where we aren't supposed to give you the financing if you can get it elsewhere. Where if you're buying something for $300,000, you can probably find another lender to do half of the financing because they're going to have a first lien on it, and they're basically they would have to drop in price by half for them to ever lose any money. So typically, we're doing some joint things with other banks, and it helps you with the lower interest rate. And it once you get, let's say, a down payment program, it also helps you on the guarantees to where you don't have to pay those fees that are associated with the guaranteed loans. So those are our most popular on the real estate side. Here's an example of one of our participation loans. We're saying if you were buying a farm for $600,000, we would split the financing 50-50 with a lender. We're each providing the $300,000. Typical interest rate from the lender might be 6%. And from FSA on the participation loan, you're going to get 2.5%. And I use 30 years, figuring if you have farmland, that's typically how long we would go. Your total annual payment would be about $36,000 on that type of a loan between the two lenders. And that's with no money down. If you were able to put 5% down, then we would be able to utilize the down payment program. You had your 30% in there. We lowered our financing to 45% of the purchase price to get to the $270,000, but it also lowered our interest rate and even shortened up our term to 20 years. Your payment goes up to $37,500, so your payment increased about $1,400 or $108 a month. Over the life of that loan, you're going to save about $90,000 in interest, even figuring in you put in an extra $30,000 up front. It's going to save you that much just by shortening that term and paying a lower interest rate. And that's why I tell people, don't try and push for 40-year loans. The difference between a 30 and a 40-year loan is about $1,000 a year. So if you can afford $100 a month, you have 10 years less of payments. I'm trying to convince my son that on his truck he's purchasing this weekend. He said, well, I can just set it up for 6 years and then pay extra. Yeah, but if you're not required to pay it, sometimes that money disappears.
Yeah.
So that's one thing, there's no penalty for payment of something that's situation,
right? No penalties for any type of early payment on any of our loans. And most of the guarantees, you won't have that either. There might be a couple lenders out there that have something in their notes just to make sure that you're not jumping back and forth to try and take advantage of interest rates. But typically that goes away after the first couple of years of a loan too. So, but no, none of the FSA loans have any penalties for early payment or anything like that. Moving on from the real estate, we also have direct operating loans similar to the guarantees. They can be used, for purchasing your equipment, your livestock, your crop inputs, all those different things. And it can also be used on the operating side for refinancing some of those operating type debts. So if you had a feed bill sitting out there and weren't able to pay it, we could use an operating loan to put that on some terms for you. Operating, we have a separate $300,000 limit on the direct side. So on guaranteed, we have one total limit. On operating, we have two separate ones of $300,000. So you could actually get $600,000 on the direct side. Those go up to 7 years, but we can do a longer amortization if someone is going to have something. If you're just buying equipment, we would probably limit it at 7. But if you're buying dairy cattle and we know you're going to have replacement livestock, maybe we'll stretch that amortization out to 10 or even up to 14 years in some cases. We also have emergency loans in case of certain disasters. We put out probably 5 or 6 designations this year because of all the flooding in different areas, a lot of them up north. And then recently we've had some along the Iowa border because of some flooding down there. But if someone suffers a loss, let's say due to drought or flooding or tornado, whatever it might be, we have loans to help recover some of that cost. If your insurance doesn't take care of it, then we can help recover some of that so you can pay your bills and get some of that done. And it also covers physical loss. So if somebody lost a barn or something in a tornado, we can use our loans to help rebuild that. And it doesn't have to be the same barn that we rebuild either. We can build something nicer. We can't go from a 40-cow stall barn to a 300-cow free stall. But within reason, we can make some changes to what's needed on the farm.
Do you see much interest in emergency loans? Do you get many of those for their operating loans or something less?
Right, emergency loans we haven't in the last couple of years. We haven't had a lot of designations. Plus, if somebody's under the limits, they will typically just get an operating loan instead of an emergency loan. It's a little easier to get. If you were looking for a loss on on your corn this year because of flooding or something like that, we actually have to wait until your harvest is done to figure out how big of a loss that you had. So a lot of times they want to get things going, so they'll just apply for an operating loan earlier. But if you've already reached that $300,000 limit, then the emergency loans can be added on top of that. They have a separate $500,000 limit. Typically, that's going to be on our, buildings or maybe some of these crops that are very expensive to put in and different stuff like that. In the last few years, I think we've done some on maybe apples and cherries, stuff like that, so they need to replace their trees. But the purpose of those can be used for pretty much anything that the farm needs. It doesn't have to be exactly what was lost. We also have youth loans available. We will make loans up to $5,000 to kids from age 10 to 20. So they're considered loose. It's to kind of help them get involved a little bit in the agriculture and also to learn a little financial responsibility. The most popular way right now is maybe a show animal at the fair. So if we can buy that calf and then they raise it and then show it at the fair and sell it there, so that's where their money is coming to pay back that loan. Those are actually the ones that kind of work the best too. We have had youth loans that don't always turn out, but any expenses associated with that project can be paid. You do need advisors to help guide you through the process, so you have to be involved in either 4-H, FFA, or some type of similar organization to qualify for that loan, and then your advisor will, kind of say that they'll help you and supervise that project. And the other type of loan that we have is our microloan program. That is something that started up here in 2013. It was a way to reach out to some of these operations that we don't consider our typical farmers. We showed that 75% of our loans go to our crop and dairy and beef farmers. We started talking about some of these others that we don't reach. If we look at NASS data and they say that there's 40,000 farmers in Wisconsin, we were talking to about 7,000 of them. What about them other ones that maybe need some financing also? So we wanted to reach some of them small operators and get into some of the different types of business that they operate. So when they invented the microloan, we looked at what is the customer's dream. We're not talking about this big expansion on things that they're doing. We'll make loans up to $50,000 for an operation that basically could gross maybe only 1,000. So if your business plan says you're going to be raising one steer and fatten it out and sell it for $1,500, that's enough projected income to qualify for a microloan. So you're on a microloan, then you're considered a farmer. But it is, we can use it for our conventional, typical farmers. but it's really to reach some of them that are getting into these new operations that, hey, I only need $20,000. Maybe, if you needed that to buy a piece of equipment, your lender's maybe going to do that for you. But if you're doing it to get into, some fresh market stuff, if they're not familiar with that, they don't want to lend the money. So that's where the microloan kind of comes in. And we actually can do those now also for farm ownership purposes. So maybe somebody just needs $50,000 to put down on the farm. We can use the microloan for that instead of our other loans. Some of our loans, and I'll get into the eligibility requirements a little bit later as far as the experience and training that you need to qualify for a loan. Microloan kind of threw that out. You don't really need any experience, you just need good credit. So what we're going to do is look at a person's credit history. It's kind of like going to the bank. If I went there now and wanted a $300,000 loan for a house, I'm going to have to fill out a lot of paperwork. If I'm going there for buy a used car, I bet I can sit there for 5 minutes and they're going to look on the computer and say it's approved and you can walk away. And that's kind of the intention of the microloan. We streamline the application. There's a lot less paperwork that you need to submit. Or there should be. Sometimes it's a little hard for the loan officials to let go of analyzing everything. That is the purpose of the microloan, is to fill that need where you can't get the financing from a conventional lender because they're a little maybe uneasy of getting into some of these different types of operations. And we don't want you to have to go and get personal loans that are at a high interest rate or put all this debt on credit cards. That's not considered available credit. So it's got to be something that's reasonable.
How many people do you have taking advantage of that program?
Microloans, we made 187 this last year. The first year we made close to 400. Yeah. So, but it's that $50,000 limit. A lot of them will start with that, and now when they want to expand, they go to a regular loan.
Oh, so you just see them transfer over, yeah.
Right. Yeah. Once they've shown some success, now maybe they want to expand their operation. So instead of a microloan, they're going to get a larger loan. Like I said, those security on them is also a little relaxed compared to our other loans. Typically, on a loan, we are going to want to, we can secure a loan 1-to-1. Buy something for $100,000 with a $100,000 loan. But if you have other assets out there, we're going to secure that up to 150%. So if you have some other equipment there, we're going to look to also put that as collateral for the loan. Microloan, we typically won't do that. So if you're buying something for $20,000, we need $20,000 of security. If it's an operating loan for the crops, we'll probably also take a little something extra with it. But term loans, we don't have to do that. We almost never take real estate on microloans for anything for an operating type purpose. To be eligible for our loans, basically anybody that's going to sign the note, and typically we aren't going to require co-signers, but if it's a husband and wife operation or there's actually two people operating on the farm or entity, everyone has to be a U.S. citizen or a legal resident. Thank you. Yeah. So if they have their green card or something like that, you're eligible. If someone is here on a work visa, we can't make them a loan because we don't know that they will be here for the term of the loan. Legal capacity, pretty much 18 years and older. But you see we have our youth loans that go below that, and also the mental capacity that goes with that. If we have taken a loss with you in the past, we aren't going to try it again. Once is enough. You cannot be delinquent on federal debt or have any unpaid federal judgments. So if you had student loans out there, they have to be current, or that would make you ineligible for a loan. Strangely enough, income tax debt is not considered federal debt. So if somebody's behind on their taxes, we could make them a loan. Typically, the loan is to pay off their taxes, but no controlled substance violations. You can't have been convicted of growing, cultivating, selling. There's like 6 different things listed. It doesn't say anything about using, but we're trying to stay away from that also.
The general idea is the federal government doesn't want to own our farms.
That's right. And even though it's legal in Colorado, we can't use an FSA loan to grow marijuana. So,
Just like a DUI.
it's pardon?
Does a DUI fall under that?
No, it does not. No. But a lot of times that will fall into their character and their credit history and things like that if they have different things. One instance, I can see where that happens to a lot of people. But there's a lot of people you look out there and they have a long history of offenses, maybe certain character issues that you want to stay away from. Federal crop insurance, that's another federal agency, so if they have any violations there, of course, that would make them ineligible. We look to see that they have an acceptable credit history. We do not look at credit scores because dealing with beginning farmers, a lot of times you haven't established a score yet. So it's more of, do you have a history of repaying all your loans? No history is not necessarily negative. We make a lot of loans to Amish and Mennonites who they aren't going to have a credit history, but they maybe repay our loans better than a lot of other people. We mentioned tests for credit as far as being able to obtain the financing elsewhere. And you need to be considered the operator of the farm. We can't buy a farm and have you rent it out to somebody. You have to actually run it yourself. And then the managerial ability. We want you to be able to run that farm yourself, and it's possible that we will require you to take classes like this to gain that extra knowledge and experience. So one of our requirements when we look at a loan, do they have the necessary ability to carry out this loan? If our loan officer determines no, we will require that you take either financial management or crop or livestock production or something like that. So courses offered through the tech schools, through online courses, school for beginning dairy farmers, different things like that.
So perhaps if you say somebody comes in and doesn't have to take this course, and say, comes to you with the one alone, and they look back and say, well, do you have to just be signed up for the class, or do you actually have to have taken the class?
No, the question is regarding the requirement to take the class and if you would need that before you were able to get a loan. We cannot turn down a loan because you need training. So if we required you to take training and then you didn't do it, we would turn down a future loan. But I have another slide here that talks about what you need to start out as far as your background. But if we determine that you need some training, that's to take within the next 2 years. And so this class here would maybe cover some of that. So if when you come in and apply for a loan, we ask about your training and experience, and you mention this class, and there's also a waiver form for borrower training. You could say that you've already completed Randy's class here, so then we likely wouldn't require you to take it again. Another thing we talk about with eligibility is a family-sized farm. We're trying to get away from what is the big corporate farms, so a lot of them are also family-sized, and also get away from things that aren't really a farm. And it's a little tougher with the microloans, but if you go out there and somebody just wants to buy a house in the country, that's not the purpose of our loans. Whether you're going to, grow some herbs on your deck or whatever it might be, that's not what we're looking for.
So if I were with this
No, well, unless you keep replanting the trees and doing something like that is a possibility. But yeah. But first thing we look at: are you going to operate a farm? Are you going to provide labor and management to the operation? Because we will only make a loan to the operator. If it's a real estate loan, are you the owner of the farm? So if you don't own real estate, you can't get a real estate loan. You can buy into it. But you can't improve somebody else's farm unless they would give us a mortgage on it. So if you want to put up a freestall on mom and dad's land, we could make you a loan, but they're going to have to mortgage the farm to do it. As far as the family size, I kind of mentioned, we try and stay with, I guess it's one of the things you can't really define, but you know it when you see it. If an application comes in and this farm has 10,000 cows and 40 million in assets and only 20 million in debt, our $300,000 loan means nothing. So it doesn't fit. And then the other thing on the bottom, non-eligible enterprises. There are certain things that are not considered farming in our rules. So if you want to, get some horses for just riding or boarding, different things like that, that is not a farming enterprise. Strangely enough, custom farming is not a farm enterprise because you do not have a risk in the crop that's being grown. So we can't buy equipment for you to go run a custom operation.
A lot of people do both, so you can buy equipment for your own operation and then use that as a custom operation.
Correct. Yep. If you need a combine for your operation and then you use it on the side for custom work, that is fine.
As long as the original intent purposes be.
Right. And if it is a reasonable size for your farm. So if you run 40 acres of corn, but you custom harvest 4,000 acres, we might buy you a combine that you pull behind your tractor for 40 acres.
Yeah, sure.
We're not going to buy one to operate the 4,000 acres.
But one of their students is not here actually. That's his farm situation. Here's a song, I'm sure.
Right.
That was clear.
Right. Yep. As long as your purchase is reasonable for your operation, and if it's a little bit extra on the custom, that is not a problem. And a lot of times we'll look at where does the income fall on your Schedule F. Are you 50% farmer, or is it more of a business? Mentioned managerial ability. We want to make sure that you are going to be able to succeed on the farm that you're out there. And in your packet is some of our eligibility requirements regarding this. We look at a combination of education, training, and experience. So if you're going to say you have farming experience for an operating loan, we want to see that you have something within the last 5 years. And if it's a real estate loan, we want you to have actually either operated a farm or been in the business part of it for 3 of the last 10 years. So if you were on your parents' farm and were only basically slave labor, that doesn't qualify as participating in the business. But if you were out there helping make decisions as far as which cows to cull and what to bring them to or what crops to plant in certain areas, you are participating in that business part of the farm. You didn't actually run it yourself, but you were providing management input, and that would help qualify for your experience there. Rule was kind of written this way because we didn't want people coming in their first year buying a farm and then really not having any background to do it. So you kind of start with the operating loan for a couple of years, and then you move into the real estate. On the microloans, it's a little bit different, where if you don't have any experience, you can say, I'm going to have a mentor, and then that person will help provide your experience. So if you wanted to get into raising fish, and you've never done that before, as long as your friend or neighbor has some type of experience that they say they're going to help you out, that helps qualify for a microloan. As far as the money that we get to make our loans, we get money from Congress every year to fund what we have, our appropriations. We were a little worried here at the end of September before they passed a continuing resolution, because besides funding our loans, they wouldn't have funded us, and we would have got some more vacation days. But we have some money now. Last year we ran out of money in 3 of our categories, both the guaranteed OL and FO loans and our direct OL loans. We went back to them, and then early September they gave us a little more money, but it didn't cover everything that we had for backlog. So sometimes loans will sit and wait, usually not too long before we get them funded. A few years ago, our real estate loans might sit for up to 2 years because they only would give us so much a year. People sit and just wait for funding to buy them. Now, because that program really doesn't cost anything, they fund it, but it's just a matter of the economy now. We actually did less FO loans this year. And they do have separate allocations for our beginning farmers and our underserved, so we keep a little bit of money set aside if we do have some of those categories that can get funded. Here's what we did in Wisconsin over the last 10 years. You can see our guaranteed farm ownership loans. That's the blue line. That has been going up like crazy. 2010 is really when things took off, and the big part was the 2009 record low milk prices. That's when banks started coming in, or other lenders, and looking to consolidate debt, refinance it, move it down the balance sheet, because that's where the person had equity. So that's when them guaranteed farm ownership loans really took off. Some of them others remain kind of constant, and depends just on how things are going in the economy. As far as our overall total portfolio, the orange line at the bottom, that is our guaranteed operating loans. Usually lenders will look to put more on real estate than operating. So they'll do a guaranteed real estate loan, and then they'll keep the operating loan themselves with cattle machinery, something like that. So that one has stayed kind of constant over the years. The white line in the middle is our total direct loan portfolio. And you can see that again also took off in 2009 and 10 with the refinancing of a lot of debt. And then the blue line is the guaranteed farm ownership loans. Of them loans on the 971 million there, probably 60% of them the lenders then take and sell those loans, what they call on the secondary market, to places like Farmer Mac and Colson Services, and some of the farm credits actually buy them loans, so the banks don't have to keep them loans on their books all the time. And that's how they lock in lower interest rates to you. They'll look at these places and say what they're offering, and then they'll sell that loan. So it helps provide you with some decent interest rates. We recently revamped our website nationally. So if you go to FSA.USDA.gov and click on farm loans, it's going to bring up a lot of information that will have total application packets there to talk about different places that you can go. And of course, links to all the offices, depending on where you're located. Information on funding and different stuff like that. And this is where we're located in the state right now. On the farm loan, Susan's going to tell you about all the different offices that we have for farm programs. Farm loan, we have 13 different sites with a presence. But on those sites, we might have 6, 7 people. And then they cover large territories, anywhere from down in the southwest, Darlington handles 1 county. And then you go east of there, and our office in Monroe handles 10 counties. The offices are kind of centralized where the majority of the loans are. Now, if we go down in the southeast, there's farmers down there, but most of them use the guarantee program. They're larger crop farmers, so they aren't utilizing direct. So we have some in, say, Racine and Kenosha County, but not a lot of activity there. Way up north in the Ashland area, we have 180 customers in those green counties, and probably 50% of that up there is forest. So we have a lot of hay and beef type operators up there. So, and those are the loan managers in each of those offices. That is my presentation, unless there's questions.
So the FDA that you're talking about and the beginner farmer, that falls under what category again? Go ahead.
Yep, SDA and beginning farmer is just another branch off. They can get any type of loan.
Okay.
But what it really does is, if we are short on funds, we have certain money set aside for the beginning farmer and the underserved farmer.
Okay.
So, and there's also the down payment real estate loan. That is only for beginning farmer and SDA clients. So,
The beginning farmer terms again are, what is that? How is that defined?
on the good question. Definition of a beginning farmer for operating type loans is that you have operated a farm for less than 10 years. So even if you've been working on we talk about, to qualify for a real estate loan, you participated in the business operations, but for when you actually started farming, those years don't count. So we can make a loan and say that you started the day that you actually own the things on the farm.
Okay. If you don't have any money in it, you like you said, slave labor.
Right.
Then. Okay.
Right. So for operating loan, it's you have your first 10 years of farming, you're a beginning farmer. For a real estate loan, it's a little different. To qualify as a beginning farmer, there's still that 10-year requirement, but it's also that you do not own more than 30% of the average size farm in your county. So on the real estate, if you already own 100 acres, we aren't going to qualify as a beginning farmer. But if you own, say, 30 or 40, you might still qualify. Every county is a little bit different. The average is probably about 70 acres than what we have out there now. They used to calculate a little bit different, but now that's the. So most people that are looking, beginning farmers will try and qualify them that way. And then like on them real estate loans, you're eligible for those loans for 10 years once you start. We do have term limits on some types of loans. So we always make sure that we caution our customers that we don't use up all their eligibility right away too. Like on the operating loans, you can get direct operating loans while you're a beginning farmer or for up to 7 different calendar years. So if someone came in and they wanted a small operating loan to buy seed every year, they would use up all their eligibility. So what we like to do is for those type of loans, find some other type of financing, and we'll do more of the cattle and equipment. So we don't waste all their eligibility because maybe they don't think they'll need it, but you never know if we have a year like this and all of a sudden I can't pay my feed bill because of the low milk price. Now I need to go back to FSA. Good question. Anything else? Great.
Thank you so much, Tom.
Thank you. I'm overdressed, but I have another meeting after this.
I was feeling underdressed.
All right, now we're back in the classroom again with Susan Hunter, who is Columbia County Executive Director for Farm Service Agency, and she's going to talk a little bit more about some of the other programs that the Farm Service Agency offers and their presence and her role throughout the state, really, in pretty much every county,
right,
especially in the southern half.
Yes, yes.
So, all right, Susan,
all right.
Thank you.
Thank you, Randy. Well, good morning, everybody, and I appreciate being able to come here and talk to you. I've been with the Farm Service Agency now, it's my 33rd year. So right out of college, I started working for the agency, and I've really enjoyed working with the farmers. So it's a lot of good people that you're going to be working with if you ever get involved with agriculture with FSA, or if you ever want to work for our agency. And we do have a lot of careers, so watch on USA Jobs if you're ever looking for a job with FSA. So I'm going to just talk on some different programs outside the farm loan program. We have our farm programs, and unlike the farm loan programs, our funding comes through the farm bill. So every farm bill, we come up with our new programs and our funding. Sometimes they extend programs. We don't get the annual allocation like the farm loan program. So your programs for farm loan pretty much remain the same. There might be a few changes with the farm bill, but they pretty much have their same programs. So in this farm bill, we have this agricultural risk and price loss coverage. And this is available to producers that have a historical crop base on their land. So if you're looking at buying some property or getting into a farm, you want to find out whether there's any historical crop bases and yields on the farm. Because if there is, you're eligible to participate in this program. And they got those historical bases and yields by reporting their acres to our agency every year. And it started many, many, many years ago. So I think they developed the bases and yields back in the 70s. I can't remember the exact year. So they looked at what was reported, and each year they would factor in and average in what was reported and planted on those farms. And since 1985, I believe those bases and yields are set, and they cannot change those. So if there's not a base or yield on that farm, there never will be unless they open it up in a new farm bill. So that's just one thing. So only those producers that have these bases and yields are eligible to participate in this particular program. And it's based on, there's an enrollment period. We started in 2015, 14, 15 was the beginning of it. And whoever signed up that first year is eligible through 2018 on that farm. So if somebody else operates that farm in a different year, that producer would be eligible for the payments. And it's based on the revenue and prices of the crops by county. So for 2014 and 15, we did make some pretty good payments. We're making the 2015 payments now. We make it the year after the crop year. So they look at what the income and what the revenue is on those crops, and they actually make the payments by county. So the yields and the payment rates vary by county. And last year they had the first payment for 2014. And Columbia County did pretty good. We had some pretty good payment rates. Dodge County we had a soybean rate. They had no soybean payments. So the farmers in that county were mad, why did they get this payment with? So there's been a lot of controversy in that program. But anyway, that's going on right now. The 2017 enrollment period runs through December 7th. So the farmers have that time to come in. If they don't enroll in the program, they're not eligible after that point. They just can enroll in 2018. But if they didn't sign their farm into that program in 2015, they can't sign up at all. They're just out of the program. So some missed the deadline and they're not too happy about that. So there's contracts on an annual basis. Anybody that rents a farm, they have to have a rental statement from the owner that they are operating it. The payments are not guaranteed. They are required to report to our office, and we have them come in and schedule an appointment before they visit our office. It's a very complicated program. When they came out with this program, it took us months to figure out what they were trying to come out with and what they would try to, just in our local level, to try to figure out what's going on. And then we had meetings throughout the state, and it went on for months to try to explain this program to get the farmers to understand the program. So the programs over the years used to be, they would get a guaranteed payment every year. It was known in the beginning, and with the 2015 or 14 Farm Bill, that changed where it's not guaranteed. It's based on what they get for revenues and what the prices are. So with the lower prices these last 2 years, we've had some pretty good payments. So that program's going on right now. So again, if you're buying a farm or you have a farm, just see if there is a crop base on that farm, because then the commodity programs are something that you could participate in. So when the new farm bills come out, you want to look at that if you have land, whether you can go back historically and bring in those cropping records to build up a crop base. If you can ever do that, do that. But if you ever have land that you operate or own, make sure you contact the local FSA office and set up an appointment to report your crops. Spring reporting is going on, or is finished up on July 15th. So any spring planted crops, the deadline is July 15th. For the fall seeded crops, the perennial forages, the winter wheat, rye, things like that, they have until November 15th to come to our office and do that. So the farmers have to come in 2 times a year. If they just have corn and soybeans, they just do it one time. If they have the hay in the pastures, they have to come in twice a year. And they just started that to correspond with the crop insurance reporting deadlines. And it's a little frustrating for the farmers to have to come in so many times, because if they miss reporting by the deadlines, it's $46 per farm to do a late filed report. And the first year we had a lot of late filed reports. But all right. So the farm programs, we also have a lot of disaster programs. In the past, our disaster programs were, if there was a loss, you come in, we make a payment on your losses. Now they're a little bit different. They're more specific to the different types of losses. We have a livestock forage program. So if there is a disaster designation in the county, and it's based on the disaster index, so they look at if you have at least, I think it's 7 weeks, 4 weeks, I can't remember. There's a certain number of weeks where you're considered a drought county, and we had that in, I can't even remember the year. I think it was in 2012 or 13. We had 13. We had the drought in Columbia County. So our producers, anybody that had grazing animals and pasture, earned a payment based on the size of the animals, the type of the animals. So if there's an extreme drought, our agency can make payments to help recover some of those losses for the feed that you had to buy. We also have a livestock indemnity program, and that's available anytime. There doesn't have to be any designation. So if you lose any livestock because of adverse weather conditions, flooding, let's say they flood and the animals drown, or there's a tornado and it kills them, or there's something that destroys a barn because of lightning strike and goes on fire and kills all the animals, we can pay a certain portion of the market price for those animals. You just stop in, bees with a colony collapse disorder, if they can prove that's the issue that happened, we can make payments to them for the loss of their bees. We have the Emergency Livestock Assistance Program, and that's for losses with livestock, honeybees, and aquaculture. So if those losses can't be covered under any of our other programs, we can cover it under that program. And again, the losses have to be reported to us within 30 days of that loss, so we can go out there and verify. You can't say last year I had these losses and come in. So you got to be timely in reporting that. Our tree assistance program, Christmas tree growers, those that have trees, shrubs, or bushes that they're raising for sale, if they're destroyed,
due to a natural disaster, again, we can help recover those losses. You know, drought, Christmas tree growers, I'm working with them right now to see what their losses are. Some of the, it's not the actual fruit on any fruit trees, but if the trees are lost, the tornado comes in and rips out a whole bunch of apple trees or other things, we can do some payments on those.
But if you get like a late frost and whatever dies off, you don't get any fruit.
Okay, the fruit is covered under another program. That's covered under the non-insured crop disaster. The tree is just for the actual physical tree, not for the fruit.
Okay.
For the non-insured crop disaster assistance program, this is something that came out in the last 2 farm bills, and that covers crops that crop insurance does not cover. Your fruits, your vegetables, Christmas trees, aquaculture, maple sap, honey, mushrooms. So if you're growing that and you have at least $1,000 income from that crop, you can insure it. And at first, when they came out with the program, it was just a catastrophic 50% level. And you have to keep track of all your production, what you sell, how much you produce. And a lot of people don't want to go through that whole process and just get catastrophic coverage. And it was $250 per crop, not to exceed 3 crops in a county. So let's say you had 10 vegetable crops that you were growing and wanted to insure them all. You'd only have to pay for 3. And now they have opened it up to, they have buy-up policies. And so it's almost exactly like crop insurance. You can get higher levels of coverage, and there's buy-up cost to that. And it's still $250 for just a basic catastrophic coverage policy. But then you can buy up from that. But for women and minorities and limited resource producers that their net income is below a county level, which there's a website you can find that at, the basic $250 fee is waived, and you only pay half the premiums. So I'm working hard right now. A lot of the people that sell vegetables and fruits, they don't want to keep track of all that stuff, and a lot of it's for cash, and they're worried that this is going to be reported to the IRS and they're getting in trouble. We don't deal with that at all. We just want to know what they have for production each year to build up their yields, so they have an actual production history, so we know where to go with the losses. And so I've been visiting lately a lot of the farm markets just to try to get people interested in the program, in this program and in the microloan program to help with their operations, to try to get more people interested. So if you're starting an operation where you're doing some of these CSAs and things like that, this is something that you might want to look into, is getting those non-insured crops covered. Because if a late frost would come and it kills all of the apples or kills all of the cherries, or we had a guy with asparagus and he lost just his first round, he lost like 75% of the crop. And if he had coverage, we would have been able to help him with that. But he didn't have the coverage. The apple producers didn't either, but we try to keep track of the people that are in the program or have those crops and try to make sure that they know about these programs. But I think that's a really good program that they have.
No, with the livestock one, is that with predators too?
No, we don't cover predators. The county usually covers some kind of predation. The Land Conservation Department, they have their programs, and the DNR sometimes deal with that. But we don't deal anything with animals. It has to be a natural disaster or weather-related natural disaster. Yeah. But if there's pests that affect a crop due to the weather, because of all the moisture and everything, and there's these, get a great big influx of pests that are killing off the crops, that can be included in as a loss, an eligible loss for that. So we'd have to look at it, work with extension agents and other specialists in that area to be sure that's the reason why the crop had those pests or those diseases. If you're getting into dairy, lately we've been having a dairy program. This last one is the margin protection program. So you're paying to decide what the margin, a certain coverage level for if the margin goes below a certain level. And it's $100. If you sign up the first year, it was $100 each year through 2018. If you signed up the first year, you had to stay in the program through 2018. All those producers that did sign up for the $100 basic coverage, no payment has been made because the price hasn't gone down quite low enough. You can get up to $8 coverage level, and some of these producers are paying quite a bit of money for this coverage. And there's been, I think, 3 payments so far this year. It goes on every 2 months. They look at what the price is. They look at what the revenue is. They look at where that margin is, and then the government makes the payments. And some of them haven't recovered their premiums that they paid yet. So it wasn't as lucrative as they thought it would be, but it's still some kind of protection for those dairy producers on the price of milk that we get and the margin that they're looking at. And right now we have a 2017 sign up, so all those producers that had signed up in 2015 have to sign up by then. Any new producers that come in can sign up by then and participate through 2018. And then we don't know whether that will be extended for another year. And this was, again, another program that was extremely complicated and difficult to understand. And UW Extension worked with us on this program and that first commodity program that I talked about. And they have a lot of information, and they can work with individual farmers to determine what is best for their farm. My agency can't really give any advice on that, but Extension can. We can just sign you up and let you know what you need to participate. But the Extension office has a lot of information. They have a lot of different websites that you can go to and different programs that you can run through to calculate what your payments would be. So if you get into dairy, you just want to check with our agency to see if there is kind of any program that we have. And if you're getting a loan for a farm that you want to buy, check with the farm loan agency, but also check with our office, the local farm service agency. We have loan deficiency payments or marketing assistance loans. So any farmer, no matter whether you're in any of our programs or not, no matter what your income is, after you harvest your crop, you can get a 9-month low interest loan. So if the prices are really low at harvest time and you want to store it and sell it at a later time, we'll give you a low interest operating loan. And I believe this month it's about 0.875 or something like that, or 1.125. It's a really low rate. It's just a good marketing tool. So if you have the storage on your farm where you can store it or you can take it to a warehouse, we can store that product for 9 months, pay you, you can pay, we'll give you a loan for that amount, and then you just have to pay it off at the end of the 9 months or before you sell or feed it. So if you're feeding it, you just make the monthly payments. You can have dairy assignments to take care of that too if you have a dairy operation. And then if, like the loan rate for corn is like $1.92 in Columbia County. So the local posted county price would have to go, if it goes below that level, we would actually make a payment to you, to any farmer. So if the daily price would go below $1.92 for corn, which is not very close to that right now. I think it's, what, 3 something or 2 something, I can't remember. The difference between that, we just issue to you as a payment. And back in, when was the big loan deficiency payment? Was that back in the late 90s or early 2000s? There was a time when the prices were way below that, and every day there was a different rate, and the farmers, it was like a gamble. Do I do it this day or do I do it this day? And you have to do it before you feed it. And the farmers could fax in all their applications. They had to fill out this particular form, CCC 666 form, and they indicate the number of bushels that they wanted to strike that day. And they could do it over the weekends by sending faxes. And some weekends the faxes got so jammed up, they lost a lot of those applications. It was a mess. I mean, we were doing payments constantly. So we hope that never comes to be where we have the loan deficiency payments. But for hard red winter wheat in the northern part of the state, we have had a payment this year where it has gone below. Soybeans, the loan deficiency payment rate, I think, is around, the loan rate is around 382. But we're way far away from that, so it's very hard to believe that would even have one. So that's just something that is available to producers when the prices go down below a certain level. One of the new things that we do have is the farm storage facility loans, and we work with the loan officials in all the different farm loan teams throughout the state with town employees there. And this is if you're short of storage for just about anything, we can finance you for storage. And this is available to any producers, and there is a 15% down payment. So any of your crops, your corn, oats, wheat, barley, hay, and they've now included hops, eggs, butter, cheese, yogurt, meat, poultry, bulk tanks, maple sap, floriculture, and aquaculture. So whatever type of operation, we're trying to tie it into the microloans and these niche farmers that are starting these new operations, that if they don't have the storage for that, we have cold storage that we can finance. And I have some of the interest rates that I'll have on another slide. But our interest rates change monthly. The crop loan interest rates for the marketing assistant loans, the loan rates for the farm storage facility loans, the loan rates for the farm loans, they change monthly, but they're fixed rates once you get the loan. And I think with the farm loan, if you apply for the loan in 1 month and you don't get it dispersed until the next month, you can pick the lower of the 2 rates for the loan. Yep. So they're pretty lenient on that. But the farm storage facility loan program is a good program. The farm loan program side gathers all the information, and then the farm loan team does the financing part. They look at it, whether it's it cash flows and all that, and they make the decision as to whether it's a good loan. So we don't have too many of those here in Columbia County, but we're looking to get more people interested in doing that. And we're getting a lot more people growing hops, and they're doing a lot more of the on-farm stuff and selling it from the farm, and we might need storage for that. And with the high, with the big yields this year, we're thinking there might be some farmers that might be interested in looking for some type of storage this year. Another one of our programs is the Conservation Reserve Program, and this is for landowners. So if you have land that's been farmed, it's been cropped in a row crop or small grain or in rotation with hay, and it's highly erodible or in an area where there's some environmental issues with the land, you can sign up. We have announced signups for CRP, and you can earn an annual payment based on the soil type. And in Columbia County, I think it's anywhere between probably $56 and $200 our payment rates per acre, depending on the soil type. And you can get annual payments for up to 10 years. We pay part of the cost share to put a practice on there, whether it be trees, whether it be grasses, whether it just be an upgrade to the trees or grasses that are there, or if you want to do a pollinator habitat to put some land in and plant flowers and shrubs and things for the bees and for the butterflies. So those are general signups, and we just finished up one this summer, and right now we're kind of at the limit nationwide for the acres that they wanted to put into this program. A lot of acres expired this year. This program's been going on for 30 years. So I think it started when I first started. And they've reached the limit, but a lot of it has expired. So after sometime in the next month, we're going to find out whether there's more acres available. But there also is a continuous sign up that's year round. You can sign up anytime, and that's to put buffers along streams, waterways, restore wetland areas. On that, you can sign up anytime. The payment rates are based the same on the soil rental types. With the general sign up, it's you bid what you want to get for a payment, and it's very competitive nationwide. So they have a certain number of acres they're going to accept. They have this sign up. If you put less acres in, you get points for that. If you put a certain practice in, you get points for that. So there's a lot of different things that get involved in that. Continuous sign up, there's no competition. Sign up anytime. They really want this land in these programs along these to buffer the water and to help with the water quality. And so that's anytime. But it has to be land that's been cropped. So if a farmer is cropping up right to a waterway or to a stream, we can put a buffer on each side of that, pay them annual payments and cost share to help put that land in. And also in Columbia County and in other counties, they have a Conservation Reserve Enhancement Program. And that's between the state, federal, and local agencies. And you get almost twice the payment than the continuous CRP, because you're getting sign up and payment incentives from the state, from the federal, and from the local. So it's the local farm service agency, the federal agency, it's the county, and then it's also the state Department of Agriculture, Wisconsin Department of Agriculture.
Those are so similar buffers around.
Yep, they're similar buffers. We just went out.
Wetlands in that?
Yep. So if it's a wet area that's been farmed and they want to revert it, it's something that was tiled long ago, and they want to, they can break all the tiles and convert it back to a wetland area. And we just visited one in Columbia County on the county tour, and it's a beautiful area, and it would always flood out, and they just had trouble growing crops there. And so they have this land in the Conservation Reserve Enhancement Program, and they're getting about $330 to $400 an acre on that land, and it's about a 40-acre parcel. So it's a pretty good deal, and it's helping that land. So it's helping keep the other fields from flooding, and it's purifying the water. And it's
That's a one-time payment.
It's a annual payment for up to 10 years, and then there's a
$300
per acre
every year.
And then there's also sign up and practice incentives the first year that they put throughout the 10 years. So it's a very good program to look at, and the whole county is eligible for that program. They had certain townships in some of the counties, and we had all of our townships except for the ones around the Portage area, and those just got included into it too. So that's another thing as a landowner to look at: what kind of land you have. Talk to the Land Conservation Department, talk to the Natural Resources Conservation Department, and talk to our office. Know what's all available for your land, because there's a lot of different programs that could help keep your land in good shape and help you get it in better shape. There's also a farmable wetlands program. We haven't dealt with that very much, but all these programs that I'm talking about, I do have fact sheets in that folder on the left-hand side that go over each of these programs in a lot more detail. So I'm kind of giving you an overview. I mean, I don't want to go into a lot of detail. I think the farm loan program is something that you want to look in a little bit more right now just to see if you're going to get into farming. But these are some of the resources that you have available if you do get into farming. And then the state acres for wildlife enhancement, that's safe. Those are real definite pockets. They're real small pockets. Like there's the Karner blue butterfly area. And that's where it's crap enhanced, where they really get into looking at these specific areas that they really want to do more work, and it's a lot more detailed, and there's only specific areas in certain counties that are eligible for that. And I don't believe that we have any in Columbia County. One major thing that you have to remember if you're going to participate in any USDA agency program, and it goes with any of the USDA programs, you have to follow conservation compliance. So you cannot drain or convert any wetlands, and you cannot break out any new land without having it checked to make sure it's not highly erodible. If you tear out a bunch of trees and you start cropping it and it's considered highly erodible land, you're ineligible for all USDA programs for life until you convert that back. And you're ineligible for the program. If you're signed up for programs and you do it, you're ineligible for that year and the next year if you get it converted back by the December of that year that the violation is found. So you're not eligible for any loans or disaster assistance, any of the NRCS or FSA conservation programs, and federal crop insurance. So it's something to really keep in mind when you have some land. You want to check out to see if there's any violations on that land, or if there's any problems with it, if there's any wetlands. And we have aerial photos in all the FSA offices. You can get an aerial photo of your land. And the flights are done almost every year. So you can get up-to-date maps, and it'll show the boundary of your land if anything's ever been measured, the field sizes. If you're looking to buy the land, we can't have all that information on there because the current owner, it's their private information. But we do have aerial photos of land, so if you want to buy any section photos, we have them for $1 a piece at our office. And you can find out whether there's highly erodible land or anything like that. NRCS, the Natural Resources Conservation Service, is in the same office as all the FSA offices. So wherever there's a USDA service center in the state, you have FSA and NRCS. And you want to talk to both of them if you're looking at buying some land, or if you have land, what you want to do with that. And to look in the folder on the right-hand side, no one from NRCS came here, but these are the different conservation programs for landowners that the Natural Resources Conservation Service has. And they have some really good programs for the land and for wildlife on your land. They have an environmental quality incentive program. They have the farm and lands protection program, conservation stewardship program. For the environmental quality program, they come out and help you do things conservation-wise for your whole farm. For the conservation stewardship program, they make payments to farmers for the good things they are already doing, as long as they agree to do a couple additional things. And some of them are putting up bat houses, or I even talked to somebody, they help the snakes. There's different things that they can help if there's a benefit for that land. They work with the crap on the back one, the wetland reserve program, where you have the easement program, where you can put the farmable wetlands into an easement for life, and the wildlife habitat incentive program. And they also, in there, is the web soil survey. You can find out the exact soils of the land that you're looking at. This is an outstanding website. So if you're looking at some land and you want to know what kind of soils are on that property, you can go to this website and find exactly what it is, what it's capable of producing, things like that. There also is conservation planning. They can come out and look at your whole farm, tell you what is good, what would be good plans for it. This is at no cost. But they'll come out and look at your land. This would be a good idea here. These are kind of crops that you want to look at. These are the crop rotations that you want to look at based on whether it's highly erodible or a wetland. And then there's also a little packet on pollinators. They're really pushing the pollinators because we got a lack of honeybees, and there's a lot of issues with honeybees and butterflies in the state and the nation. So that's kind of the end where NRCS comes in.
So if you buy land, and I could contact you guys to make sure that there isn't any that, but prior to me owning this land, have to do it type of thing?
Oh, you'd have to check with the landowner, and they'd have to give you permission, or they'd have to request that information so you can get it. We're tied under these personally identifiable information, so we can't give out information on somebody else's land without their permission.
Could build that as a contingency.
Right. And you definitely want them to, because sometimes we'll have land in this conservation reserve program, this 10-year program, and somebody will buy the land and the landowner won't tell them it's in that land. Once it's sold, if you don't follow the contract or succeed to the contract, you pay back every single payment they had earned plus interest. So if it's been in the program for 8 years and it's a sizable amount of property, you as a new landowner, unless you agree to succeed to the contract within 30 days, you have to pay all that back plus interest for all those years. And we don't want, you just really, any land you buy, you want to make sure to find out what programs it's in. And you really want to work hard with your real estate agency and that landowner to know exactly. Because if you call up and say, what programs is this farm in? We can't tell you. But you say, is this farm in CRP? We can say yes or no. Is this farm, we can say that. So if somebody calls and we just tell them, well, just ask me if it's in a particular program and I can say yes or no. And that's all we can do. But we can't say these are all the programs they're in and this is what they're getting for payments and all that kind of stuff. So something to keep in mind when you're looking to buy land. So as far as the HEL and WC, the highly erodible land conservation and wetland conservation, there's a form that you fill out at our office. And it's going to ask you whether you're going to plant or produce an ag commodity on highly erodible land without following this NRCS approved conservation plan. And so if we'll know at that time whether there's a plan or not on that farm. And if there isn't, you'd have to get a plan on your highly erodible land that goes over the different rotational plans that you have to follow in order to control erosion. And not to plant or produce an ag commodity on a converted wetland or convert a wetland. So if you go, a lot of farmers in the last years see a lot of trucks with the tiling equipment going by. They're just going in and tiling the wet fields. And if they didn't have prior permission to do that because it had already been tiled or they're converting a wetland, they're ineligible for our programs forever unless they convert it back, unless they break those tile lines and get it back to the condition it was before.
And what you're saying is that as a purchaser of that land, I'm also responsible for what I bought.
Right, so if you have land that the prior owner converted and you come in to sign up for one of our programs and there's converted wetland, you would have to convert it back to its original state in order to participate in any of our programs, to get a farm loan, to do anything with us, to get crop insurance on that land. So that's something they started a long time ago, and it's just one of the requirements. They don't want to degrade the land, so they want to preserve the land for future generations, and this is just the way they do it, because if you want our benefits, you got to follow these rules.
One of the things we're doing in our classes is writing our own land ethic. I think one of the things all the deal was talked about the land ethic many years ago, and it was published. We only have so much land that's available to us. We only have so much water. Both of them are necessary for us to survive the species. Whether we like it or not, if you destroy the water, we're done. That's the only thing. So most of our land is controlled by private interests. I think nobody wakes up. No farmer goes out and says, today I'm going to just go destroy the water.
Yep.
But sometimes what we do in the practice of farming might not be the best for the land and the water. I think that's why some of these came about. Some of the practices weren't always the best thing to do for the land and water. And we're recognizing that.
Yep. And when you see commodity prices go up, we see a lot more violations. Because they want to plant up to the streams. They want to tear out all these fence lines and take out all these trees so they can get as much planted as possible. And they're getting into highly erodible land, and they're doing some drainage on wetlands. And so if we see it on a map, we go through these maps, and the producers are reporting crops, and we look at 1 year and look at the next. 1 year they got a stream going like that, the next year it's straight. They violated this. They're going to have to convert it back in order to stay eligible for our programs and refund whatever they got for payments that year, or the year it was done. And we came across one, just an example. They converted it in 2013. No, 2011, I think it was. And it was just reported, we found it, they got to pay payments back ever since. Got to pay all those payments back. They're not eligible for last year's payments, this year's payments. They're converting it back. They won't be eligible until 2016. So producers have appeal rights. Producers have appeal rights with our agency. They can go to our local county committee. We have, which is really neat. We have a really grassroots agency. We have 3 farmers in most every county that are elected by the farmers in the county. They usually split the county up into 3 sections. And every year a different area goes through an election. So these producers are elected by their local producers. They actually hire my position. So they are my boss. I meet with them every month, and they make decisions on appeals. They look through what I do to make sure I'm doing things right in the county, that I'm considering everybody in the county. And so they hear appeals. So if we tell a producer you're ineligible, that producer can come and explain what happened. And if the committee turns them down, they have an option to do mediation or go to our state committee, which are politically appointed. And if they don't agree with that decision, they can go to the National Appeals Division. So producers have rights to appeal our decision. So it may be that we made a determination that they were ineligible and it was a wrong determination. They're not they don't have to live with that. If they really believe that they were right or they didn't violate something, they can still appeal that decision. So they do have that available. But this is one of our biggest things to remember on a farm. If you buy land or you farm, make sure you are complying with that. And if you ever want to do anything, take out any trees or do anything with any wetlands or anything, just check with our office. Go to your local FSA office and they fill out this form. We send it to the Natural Resources Conservation Service, and they look at the land and what's been done in the past, what you can do, what you can't do, and they come back with that determination, and they'll work with you individually on that. If you want them to come out on the farm and help you with stuff, they'll do that too. So just something to remember with the Natural Resources Conservation Service. They are a very good agency. And again,
sometimes they partner with the county level
Yep.
conservation.
Yep.
But
the county level.
To see if I just posted the
Yeah.
video from Sauk County Area Land Conservation. Talking about some programs.
And usually the Land Conservation Department, the county department, has to sign off on our farm plans that NRCS does. So they have to agree on those plans that we develop. So anytime they do a farm plan, they have to have the the Land Conservation County Department agree with it. So they work together on that to make sure they have the best plan for that producer. And Tom went over the farm loan program, so I just had a little information on that. So I'm just going to skip through that. These are the October interest rates for the farm loan and for our other programs. So for our marketing assistance loans, I guess I was wrong, it's 1.6325%. So if you wanted to put a 9-month loan on the crops that you planted, that's what that loan rate you would get. Or the loan interest rate you'd have to pay. And the loan rate for like corn is $1.92. And if you're interested in finding those out, I can give those to you too. Each county has different loan rates for their different crops. We have the farm storage facility loan. So if you're looking for a 3-year loan, it's 0.875%. I mean, it's really low interest rate. 15% down payment. Anybody's eligible for those. So we have a 3, 5, 7, 10, and 12-year loans for the facility. And then those are the interest rates that Tom had gone over for the farm loans. So that's just a snapshot of October. November will be a little bit different. They usually don't change very much from month to month. They usually, they go up a little bit, down a little bit. So basically, but they are really, really good interest rates. And those are all available on the USDA Farm Service Agency website. There also is something that's called FSA Farm Plus. It's a customer self-service website. So if you own land or operate land, you can access your profile, your farm records, and your maps. You can print those maps out at home. It'll prove whether it's you have your basis and yields. You can print out when you want to come in and report your crops. You can print out those maps and you can write in what crops planted, when they were planted, what they were planted to. And what you have to do is get this level 2 access from USDA. And there's a website there. You just click on that. You get your level 2 access and you get your username and password. And then you come in our office. We validate you. Then you can access your records anytime, print out the maps, look at what you have, what you're signed up for, and all that. So that's a new thing they came out with in the last couple of years. So if you own land already, you want to look into that. If you're looking to buy land or rent land, and you do, you want to check into that and sign up for it. Because you get a lot of the information without having to call us.
Do you see they moving towards, as you were saying about like crop reporting and the other, could use like the aerial picture, all the online stuff that's going on, to see that moving towards by com versus having actually the show.
Yes, I think we're eventually moving toward that, but there's so many farmers that don't even access the internet. So we have to make sure, So there's so much detail that we need on those crop reports. We need the acres, when they were planted, and everything has, so let's say on a farm, we have all the land measured on all the farms that we have on our records. So if someone comes and reports and there's still like 3 acres that aren't reported, we have to make sure we get every single piece of land reported. So before we can finish with our compliance and our crop reporting, everything has to zero out. So whether it's pasture land or whatever it is, or if it's just non-ag, it's just left, to natural cover, things like that. So, but that's what they're going toward. All our newsletters now, we used to send out paper newsletter. Now it's all through our Gov delivery system. And that's something that you might want to sign up for. You can sign up for that on our website, and you can get you'll get emails of our monthly newsletters from our state office. And then if you sign up for a particular county, I will send out announcements on these signups are coming up. These are different farm loan programs to consider. So that's something that you can sign up for too. It's called Gov Delivery. You can do it right on the www. I think on the very last page of the presentation, I have our website, the Wisconsin website, and then just sign up to receive email news. You can sign up for our news releases, and you can sign up for our Gov Delivery. And if you have any questions, you can just call me on my my card that I handed there, or my contact information. So I do announcements, and then if we have job openings in our office, I'll announce those on there. I just am hiring a new program technician, and so I had some interest from the local producers of people that wanted to apply in agencies. So, but this is a really good one. The Gov Delivery is really good. And that keeps you up to date on what programs and services, or if you know anybody else that's in farming that isn't on this, they should really check it out, because that's where our information gets out. It's either through the Gov Delivery emails, or it's through local newspapers and trade magazines. But they've gotten away from the paper newsletters just because it was so expensive. It's just saving the government and the taxpayers a lot of money not going that route anymore. And again, I talked about the elections. So we have elections each year. This year in Columbia County, it's in the southwest part, or the west part of the state of the county. We have nominations in June, and they have to fill out a nomination form. And then we're all, besides 3 committee people, we're always looking for women or minorities to serve as an advisor. You get paid for your time, travel time, and time in the office. And we have meetings once a month. They're usually about 3 to 4 hours. And then you're consulted on different things. But we try to get women and minority who are active farmers to be on our committee to make sure that their voice is heard. Because it's usually white male. Over the years, it's usually been white males on the county committees. But now we're required, if we have 3 white males on the county committee, we're required to have an advisor that's either a minority or a woman. We have no choice. Right now I have a woman and 2 men on my committee, and I did have an Asian woman as an advisor for many years before that. She was interested and got on the committee. So if you know of anybody that's interested to be an advisor to our committee, we're always looking for that. They get appointed in March. You just fill out a application, just fill a form that you're interested, and then the committee takes a look at that, and our state office looks at it, and then you get appointed for a year, and you can continue on each year if you want. And that's all I had on our programs. That's my office, my address, phone number, email address, and then our web page. And if you just take the Wisconsin off, you go to the national web page, and all our press releases are there. You can get information on all the programs and services. You can find other agencies within USDA. There's a lot of programs out there that you want to check in. You also want to check in with the Wisconsin Department of Agricultural Trade and Consumer Protection. They have a lot of different programs that you'll want to check out to see what's available to you. Our agency doesn't do any grants. We have our loans, we have our other payments in the programs, but there's no grants. But rural development and the Wisconsin Department of Agriculture, they have different grant programs for new operations starting up. If you have some niche market, or you're going to be doing something neat out there, they'll look at helping you out, or you're going to do some value-added thing. Both of those agencies can help with certain grants on that too.
Another one that's good with that is SARE.
Yep. Yep. Yeah.
Of course.
And if you're interested in, certifying your farm operation as organic, the Wisconsin State Department of Agriculture can help with that and give you different places to go to get certified for that. And our agency looks at the different prices with our loans. We're starting to look a little bit more into the prices that you receive for cash flowing for organic crops. They're kind of looking into that a little more because usually you get a little bit better price for organics. And we try to figure that into the cash flow a little bit too. But any other questions on anything?
Other than the aerial pictures, if you are signed up for a program like that, you guys must do on-site visits as well, right?
We do if needed. We don't, if you were, report your crops and there's a certain field that you could not plant because it was too wet, and let's say you wanted to plant corn out there and it was too wet, we can give you credit for planting that corn, but I have to go out there and verify that the conditions were too wet. The Natural Resources Conservation Service, they do a lot more farm visits when they're doing their farm plans. Conservation Reserve Program, we spot check a certain number of them to make sure that they're keeping the land in the cover that it's supposed to be, that the trees aren't all dead, or they're not out there cropping it, or they haven't built something on the land that they're not supposed to. So we do that. The farmers that report late, they miss their, everything's certification, but if you report crops after the deadline, I have to go out and verify the crops planted as was reported. And so I probably made about 150 farm visits this year, just on that. Driving through, and there were some prevented plantings how to make sure that the area was exactly that. So I'm getting a pretty good feel for the county, and it's amazing how so many roads are not marked, and you have no idea where you're at. And I thank God for my GPS on my phone.
Yep.
But there's a lot of opportunities out there if you're interested in getting into any type of operation. There's the farm loans, there's our programs, there's the county, state. I mean, there's a lot of opportunity out there. You just need to know where to find it and who to contact it. And I'll have to say that if you contact the FSA office, we now have to try to find the information for you. If we don't have the information, we have this Bridges to Opportunity that they just started. If we don't have if you come in and say, where do I ship my wood overseas? We need to find that out for you and let you know who to contact. And I've been doing that for years, but now it's a requirement of our agency that we help you find the information you need, no matter what kind of question you have that deals with agriculture or anything else. So look at FSA as a source of information for any question that you might have. And thank you. And you can call or email me anytime too. So feel free to do that, or anybody else that you know that has questions. So
Thank you, Susan.
thank you.
Excellent.